All right, let's go ahead and start. Good afternoon, Checkmate crew. Today is September 7th, 2022. It is just afternoon here in New York. Let's get right down to business. First thing that I wanted to go over was the change in my positioning. Not really changing position. I added a position. The UUUU, the energy fuels, our uranium play. I went ahead and on the dip this morning, I went ahead and bought a starter position at right under $7. It was around, I think it was like $6.97. That's where I put it there. And again, it's in the Discord. So for those of you joining us on YouTube or Twitch, hey, the link on the description, it's got our Discord link on there. Go ahead and click that. Join us. There's no paywalls. It's all free. You get alerts like this around the clock from different traders, including myself. So why not, right? You got nothing to lose. Anyway, $6.97 it is. Starter entry. You're right now looking at the weekly chart of UUUU. I'm using these Bollinger Bands, weekly Bollinger Bands, as my risk management and additional legging in levels. As you all know, the 2 standard deviation Bollinger Bands, which is these red lines right here, I like to set them at 18. The 1 standard deviation Bollinger Bands, I like to set them as 20. All right, and that's just what I know institutional traders use from my days back in Wall Street. This is what they use, so that's what I use. All right. I am willing to buy some more if we get to the lower 1 standard deviation Bollinger Band, which is right now at $5.57. It just tends to be, if we do, revisit lower levels, it tends to be that's where we see some pivots. Okay, it just tends to be. All right. And right now, one could argue, oh, maybe it's the lower second Bollinger, standard deviation Bollinger Band, and it could be, but right now they're very close to each other. So yeah, I might leg in some more at 557, maybe even leg in a little bit at 481. Anyway, this is something that I'm going to be playing for at least 3 to 5 years. This stock, we are definitely going to showcase this on Theta Thunder. We're going to be selling premium on this and going to be doing long-term options plays on this. So stay tuned. Not yet. I do think that we have a little bit more upside before I start selling some calls. If it gets to $9-10 range, I'm going to start selling some calls on this and buying some protective puts, which is the collar trade, and I'm going to go over that more during Theta Thunder. Okay, but today is more about what's going on in the markets. As usual, what we do on High Noon Highlights, but I just wanted to give you that update. UUUU, I am in on a starter position at $6.97. All right, again, buying some more at the lower 1 standard deviation Bollinger Band that has length 20 at 557, and then the 2 standard deviation Bollinger Band at length 18 that I use at 81. Okay, so those are my next 2 buy levels. All right, really, it's a starter position. It's to alleviate my FOMO, because I have mad FOMO when it comes to uranium. We'll see. All right, I'm up a little bit. We're up about 1.5% or so. So great. Let's go over what's going on in the markets today. A lot of people, especially on Twitter, hey, also in our Discord, a lot of people thought the markets were going to go down today, but that's not what happened. Hey, here at Checkmate, what have I been saying? I've been saying that this is a monster options expiration. We've got very extreme positioning on both sides, not only on the bullish side, but also on the bearish side, okay? More so on the put side. There's a lot more in the money puts, okay? So what does that mean? When you see the VIX fall, what does that mean, all right? What does that mean when the VIX falls? It means there's a lot of puts being sold off, right? Okay, so, we saw VIX coming down, market goes up, all right? Especially as we get closer to options expiration, this relationship gets stronger and stronger, especially with all this extreme positioning. Remember about a week or so ago, we talked about the options positioning on SPX looked like an inverted bell curve. So a lot of positioning that's out the money on the put side and the call side. And usually what happens during that time is usually you see a lot of chop happening. All right, and S&P 500 when that happens. All right. Also, too, today we're getting a very strong response from junk bonds. Look at this. Look at this. HYG is up 1% today. Let's see what happens to our junk bonds accumulation distribution line, our ADL. One thing I really wanted to go over about junk bonds, I've been monitoring the junk bond market a lot. One thing I just found out was that there's been a huge number of issuances of new junk bonds recently, quite recently actually. And I think what's going on is that a lot of companies are trying to take advantage of lower yields now and issue issue basically corporate bonds to the market before the Fed raises interest rates later on. Okay, and perhaps maybe even before the CPI report comes out, just in case if bonds sell off and if yields go up, and that would make it more costly to borrow. So in the last few days, just from the data that I get, my data is a little bit lagging. I saw in junk bonds, there's been about $150 billion worth of junk bonds that were issued, corporate bonds that were issued, okay? A lot of them are junk. And so what kind of makes me, I'm just thinking about different angles here, okay? Just thinking out loud here. What if all these negatives right here, all these declines were from those junk bonds being issued? Okay. Remember how we were talking about on Friday that advance that was an anomaly? Well, what if the declines are the anomaly right now because of all the junk bonds that are getting issued? Okay. What if we see a huge advance for the next few sessions? Today is Wednesday, so Wednesday, Thursday, Friday, 3 in a row. Usually, what I like to see is 4 days in a row. Okay. But if we see very strong advances for the next 3 days, hey, that changes things, okay? If this line curves up from here, I'm not saying that it will, okay? I'm not trying to predict the future, as always, okay? I'm trying to just anticipate what could be. But if this starts really curling up for the next 3 days until the end of the week, that could be the first signs of a higher low in the junk bonds ADL line, okay? That could be. And then, that begs the question then, then is the market looking forward and is already, are already rate hikes priced in? And if you actually look at the Fed funds futures and look at the target rate probabilities based on them, it appears so. Because if you look at the September, it's like 80% chance we're going to have that 75 basis point rate hike. If you go to CNBC, if you go to Bloomberg, if you go to all these, media outlets, people are saying, oh, but what if we get a 75 basis point rate hike, that's going to be really bad and investors are going to sell stocks off, blah, 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 blah. But if you look at this, it's already, the bond market's already pricing that in. So this is a public site. This is free. Are we the only ones that check this? I highly doubt that. I'm sure a lot of institutions and even a lot of retail traders are monitoring this. You go on Twitter, you see this, from time to time, you see people posting this. So obviously people are looking at that, and I just think the media is being a little bit sensationalist here. I think the market is pricing in 75 basis points. Now, what they are not pricing in is us going above or going above 4 by a large margin. Like, it doesn't look like the market is pricing in anything like 5% anytime before July. If you look at it, there's a decent chance of 4.25, maybe even up to 4.50 or so. but we're not seeing anything near 5, okay? So what if it changes? What if the CPI report comes out? It comes out hotter than expected? Maybe it could be, okay? If you look at right now, inflation numbers coming out of other countries, especially on this side of the hemisphere, really who I'm looking at is Canada. Canada is already seeing a large drop in their inflation readings, okay? We're not in the same boat as Europe. Europe is a little bit different. They're at the mercy of Russia, and with the energy prices there. That's the situation there is a little bit different. Also, too, remember during last earnings report when we looked at Coca-Cola's earnings and when we looked at McDonald's earnings, this is the reason why I look at those two companies' earnings. It's a great barometer for inflation and the consumer, okay? And they both, if you remember correctly, they both mentioned that the inflation issue was a lot more difficult in Europe than it is here in the United States. Okay. Again, I think Canada is could be a leading indicator here because they just came out with some numbers and it looks like their inflation, some of their inflation numbers are coming down. So maybe that might be the case here. Okay. So I mean, time will tell. We'll see. We'll see what happens on the 13th. I mean, I'm not going to gamble either way, but something to think about, especially for those of you who are positioned with puts. If you still got some puts still left, you may want to consider managing some of that risk. That's all. Okay. So that's So again, I think right now this is what's priced in. If you look at junk bonds right now, a lot of companies are issuing, not just junk bonds, but corporate bonds, even in the investment grade, they're issuing before the CPI report, I think. And again, what if our ADL line on junk bonds, what if this is the anomaly here? What if all this was due to that 150 billion of issuing right before a lot of companies fear that there may be a risk of yields going up, okay? If you're a company looking for credit, and that there's a big CPI report coming out and a big Fed meeting, you may want to lock in rates before something happens where those rates could go up. I'm not saying they believe necessarily it's going to go up, but there is that element of risk management. Why risk it when we can lock it in at these low rates? Because let's be real, interest rates are still very low. Okay, the bottom line here is that the right now this idea of this neutral rate, this rate that's above inflation, marginally above inflation, it's still very, very low. I mean, if you look at TNX right now, all right, let's go ahead and look at TNX, which is a 10-year Treasury rate. I mean, it's higher than pandemic lows, but comparing it to that, I think it's pretty dumb. All right. If you look at it right now, we're just where we were, a little bit higher than pre-pandemic. But, if you look at, before 2006, 2007, before all this, before the 2008 financial crash and all this easy money and quantitative easing, we're not even there yet. Okay, we're not even there to those pre Great Recession levels. Okay, we still got a ways to go from there. All right, we shall see. I mean, one of our indicators that we look at too. Remember this one. Remember our copper to gold ratio times 1,000. This right here, it tracks TNX quite well. Actually, let's change this to TNX real quick. All right. As you can see, historically, it has tracked it well. Now, there are times where it does diverge, but then when there is a little bit of a divergence, they do end up meeting at some point, okay? Here, it was a little bit of a, overshoot. On the way down also too, this overshot it as well, but hey, it ended up meeting at some point. Right here, the actual ratio, the copper to gold ratio, went up faster. TNX came up. I think it was about a year later. So it took about a year for them to match up again. Now, our copper to gold ratio is coming down again. It was coming up, now it's coming back down. Does this mean yields will start coming down too? Okay. It tends to be this leads a little bit. Okay, even on this rise right here, it led by about 2 weeks. All right, and this fell starting about 2 weeks ago. So by next week, that would be week 3. Is this going to play catch up? Maybe the CPI report comes out much lower. Then what? We could see yields coming down. And if yields come down, I'm thinking, and with the extreme positioning that we have in the SPX options chain, we could see a huge rally if that's the case. Okay, again, I'm not trying to predict the future, just anticipating what could be, just like a good chess player would, anticipating what the enemy does and thinking 5-6 moves ahead. That's all I'm doing. Okay, that's all I'm doing. I think that's definitely possible. All right. So keep an eye on that, guys. TIP TLT, we talked about this many times yesterday and the day, and actually starting from last week. Remember, I said we had an outside day down, and every time we have an outside day down within 8 days, 8 candles, 1, 2, 3, 4, 5, 6, 7, 8, we go back up and we get knocked down again. Same thing right here, outside day down, 1, 2, 3, 4, 5, 6, 7. This one, it took 8. This one, 1, 2, 3, 4, 5, 6, 7, 8. It's already falling out. Is that the 8th one? 1, 2, 3, 4, 5, 6, 7, 8. It is. It is the 8th one. So does it fall again? That we've seen a pattern of these outside day downs. They've been actually pretty good. You see an outside day down in TIP TLT, our forward inflation looking indicator. It seems as if this may be another top, and we might see TIP TLT coming down for the next couple of weeks. Again, is it a coincidence that this is happening right as we're getting a big CPI report next week? We shall see. Next week, we'll see if this is just a coincidence or, hey, 3 in a row. I'm convinced then this must be a thing. All right. We'll see. As far as liquidity data, though, it's not necessarily improving. I mean, this is our high-low line. It's still coming down. Our advanced decline line still coming down. And this is the S&P 500 equal weighted index. The equal weighted index is coming up, which means we're actually seeing more broad participation in the stock market, in this rally. We're seeing more stock. It's not just the big tech companies that are participating in this rally. It's all around. So that's so it looks like for today at least, breadth is improving. Although, as we are close to OPEX, I will want to see this for at least 3 or 4 days in a row before I say, okay, that's it. Maybe we are going to see a sustained rally. Again, because of this options expiration, I think it's better for us to wait for confirmation before we really start, acting with conviction in this market. Okay? So that's what I see so far. Other things I'm looking at, oil. Oof, guys. Thank goodness. Oof, last week, remember before Friday, right here as it popped up, I got out. Thank goodness I did. Oh, this is nasty. Really nasty. I don't know what to say. I thought we were going to get a good chance at shorting right here. I guess not. I will, however, look to long if we get to like around the 70s, maybe 75, 77 zone. I think might be a good zone to go long. Even then, I'm going to keep it very small. I think the bigger trade is to short it at these levels right here. Again, I'm going to use the December contract. If we get to the 105, 110 zone, I'll short oil. Corn, another thing that's on. Oh, it was up. Now it's coming back down. Corn. I mean, if it can get to that if it can get to the 750 zone in the December contract, let's go to the December contract real quick. If it can get to the 750 zone, I definitely want to short corn. Will it get there? That's a different story. And again, the reason why I'm choosing 750 is for risk management. It's just the edge of our price structure. If it gets there and we short, risk management is very easy. We close 3 or 4 days above this, I get out at a very minimal loss, and that's it, right? The reward to risk is great. If you look at DBC has also been a good indicator of where TIP, TLT is going to go. We're seeing DBC, the broad commodities ETF, we're seeing it make revisiting some of its lows. If it gets any lower and closes there, making a lower low, that would definitely fit our thesis of the outside day down and this coming down again. All right, that would definitely fit. We shall see. Move index. This is bond market VIX. It's actually coming up. Interesting. So will we see the VIX? Usually when we see the move index go up, we usually see the VIX go up within a few sessions. Sometimes a week. Sometimes there's a week delay. Okay? Sometimes. Right? Right here, June 9th. Well, this one was really sudden. But right here as well to August, right? It went up, and then we saw a little bit of volatility in the end of August. It led by a few sessions, okay? Maybe that's the case here. Move goes up. If it closes there, okay, and if it advances for the next few sessions, I can definitely see us getting some added volatility in VIX. Generally, again, a few sessions in advance, all right? ZF. This is our dash for cash or cash is trash indicator. If this keeps going down, cash is still an alternative, all right? So I don't think the VIX is going to make some really large moves unless this goes up. Now, if ZF starts coming up and cash becomes trash again, then I think we're going to see a lot more hedging demand, all right? So let's see. Let's observe, okay? I think a lot of things are there's going to be a lot of false moves, especially with the options positioning in this options expiration. But not only that, we got these really big events coming up. The CPI report, also the Fed meeting coming up. So, we might see a lot of false moves. We might see some big moves get faded, all right? Speaking of faded, earlier, I saw this moving up, the 10 and 2 year. It appears as if it's still, it came down a little bit. All right. Now, generally, I actually took a look at some of the inverted yield curves of past markets, especially during rate hiking environments. And if you actually look at the last 5 rate hiking cycles since the late 80s, if you looked at 1989, 2000, and 2006, I don't know if TradingView goes that far. Does TradingView go that far? It does. 89. Yeah, it does. Okay. So yeah, if you actually look at some of these rate hiking cycles, the average time, especially 89, 2000, and 2006, okay, because those were the ones before recessions. There were other rate hiking rate hiking environments as well. 2017. 2018 was one of them. But that wasn't before a recession. Okay, so the ones before the recession is 89, 2000, and 2006. And if you look at those, when the 2 and 10 inverted, usually the inversion predated the peak in the target Fed funds by an average of 4 months. Okay, we are in day 60 of this inversion. Okay, we are in day 60. Which means, I know if this plays out that way, that means we got about another, 2 months another 2 months before we get to peak Fed funds, which is November, okay, which is around November or so, November, December, all right? So that is actually what's priced in. What's priced in is peak December at 4%, and we stay there until July. I'm not saying history repeats itself exactly, you know. It doesn't, you know, history often rhymes, but every moment in the market is unique. So will it be different? We'll see. Okay. But again, it generally is. If you look at 89, 2000, 2006 rate hike cycles, again, the inversion predated the peak and the target Fed funds by an average of about 4 months. 4 months. We're already in day 60. So 2 months would be around November. So if it's an average of 40, yeah, it could be, you know, a little bit more, right? 50 or 60 or so. That would put us around December. Okay. And again, if that's the case, you know, we could see, again, the TNX fall, TIP, TLT keeps falling. If we get those nice, better inflation numbers, again, Canada is already seeing lower inflation readings. So I would say that their cost structure, their inflation looks a lot more similar to ours here in the United States than what ours looks like to Europe, for example. All right. So let's see if it plays out that way. Again, I'm not trying to predict the future. I'm just looking at possibilities. Okay. Just looking at possibilities here. What else? What else did we have in store? Dollar, this morning, the dollar was on a rampage, but then it touched the, well, it didn't actually touch, it almost touched the upper 2 standard deviation Bollinger Band, and then it fell. Also, we saw the Europe coming up. So that's one reason why I decided to go with UUUU today and pull the trigger. Just because of all that, you know, we saw HYG also coming up. And now this all could be one day event, so I'm not saying that, you know, it's over by any means or this bear market is over or anything like that. But, you know, if we see the dollar come down a bit, we see the euro advancing, we see HYG also advancing, you know, we could see the market go up, you know, for the next couple of weeks to 3 weeks or so. All right. If our inflation number comes out better, hey, we might actually see liquidity data improving. Well, then what does that mean for our MOAB? Again, we'll take it on a day-by-day basis. The MOAB, we don't have it yet. Okay. We don't have it yet. We need confirmation first in this market. All right. We have not seen liquidity improving at all. Okay, not even a little bit improvement. We haven't even seen that yet. So let's, you know, again, the idea that I talked about earlier, you know, just a few minutes ago, that I'm just thinking out loud. That's just devil's advocate. I'm just thinking about angles just in case if we're wrong. Okay, but I do think that, you know, I do think that we're still going to see a little bit more volatility, especially if that CPI data doesn't come out with lower numbers. And I think it has to be drastically lower or else, you know, I think liquidity data is probably not going to improve much. All right. Okay. So there's that. That's all I had in store. Oh, you know, one last thing before I go to crypto, the Japanese yen. Okay. I mean, what a shocker here, you know, overnight. The Bank of Japan comes out and announces that they're going to do even more bond buying, even more in this environment. Japan is one of the lone doves. Okay, what can I say? I don't know. I don't know what their end game is with this, but I think they're losing control of their currency. I don't know how to play this. I still think, you know, I've been saying this on Discord. I think the most underrated risk right now in the future that could happen is a 180-degree policy shift by Japan. Okay, what if they start tightening? All right. I think that's a risk that's getting overlooked. Not saying that it could happen, but it's definitely, you know, something that I think would be very unexpected. We could see, you know, the VIX spike, or, you know, we could see a little bit of a sell-off if that happens. We'll see. But right now, Japan is getting a lot of pressure domestically to deal with inflation. All right, we're already seeing that pressure mount up. I don't know what's going to happen. Okay, and there's really no risk managed way of playing this right now. Okay, I am not participating in this. Okay, and, if we go long, and this could fall, right? And that's a huge drawdown. Okay, we're talking about 4x positions here, or even futures. Those are leveraged positions. Okay, I am not taking a leveraged position in this. What if we go short here? All right, and this thing keeps going up. I mean, these move 1, 2, 3, 4-day moves right here. That could easily wipe you out. This kind of move if you're wrong. All right, so there's no risk managed way of playing this. I'm just gonna stay out, but I'll observe. Okay, I'll observe. So that's that. Nothing has changed in my plan. You guys know what the plan is. Okay. Nothing has changed, all right? We are still, as long as liquidity data is still not improving, all right? If we get to, 4150 or 4200, in that zone, I'm going to be buying 3 to 6 month put verticals on the indices, most likely the triple Q, okay? But I'm going to use the S&P 500 levels to determine that. All right. And again, if we get to 3650, 3660, if we revisit the lows from June, I'll definitely start buying some SPY shares for my long-term portfolio. If we get to 345, that's where I'm going to do some major SPY shopping. And then if we get the MOAB signal, that's when I'm going to buy some in-the-money calls and the indices. The in-the-money calls, I'm leaning more toward the Russell 2000. Speaking of the Russell, I also opened up another position yesterday at the end of the day. I don't know if I went over this in yesterday's high noon highlights or not, but remember this, I still got these. I put in a stink bid at 220 and it got filled, and I'm about 40 or 50% ahead. Even though we went up a little bit, but not. It was because I got it at such a cheap price. Oh, and by the way, how do I do stink bids? So the reason why I didn't go over this yesterday, because I know a lot of you use those. I'm not going to mention the names of the brokerages, but you guys use those. A lot of you guys use those free trading platforms. Those platforms do not have conditional or one cancels the other orders. Okay, those are special type orders. All right. On my system here, my brokerage does allow it. My other broker that I use also allows it as well. They call it a conditional order. So, depending on your broker, it may be called something different. But I can put in a bid for what is it? I can put in bids, for options 8 legs at a time. Okay, so, or not 8 legs at a time, but if for one cancels the other, I can put in 8 different orders, and whichever triggers first cancels the rest. Okay, all you have to do is press shift. So if you're gonna buy this one, I can click on the ask. I can just keep adding. Oh, why won't it let me? Well, anyway, you can just press shift and then add up to 8 legs into this. All right. Oh, right here, single order OCO. Okay. So that's what I did yesterday. I usually put 8 of these, and then you can also in Thinkorswim. The nice thing about it is you can actually put in another ticker symbol as well too. So you can add 4 of these, doing like that. Okay, and then from here you can play with your bids and the price that you want to execute it at. And then, of course, I start very low, and then you can inch your way up with different legs, cancel one order at a time and change the legs. So this way, you can save a lot of buying power. Now, if you're using a free trading platform, you will not, I don't think you have the option of using one cancels the other. So you're just going to have to place an actual bid, and whichever one triggers first, you're going to have to manually cancel them. But that just means you just have to have enough buying power to cover all of those orders. Okay, so if you've got a lot of cash and you're doing like very small lottos, even if you have like I don't know, $50,000, $100,000 account, if your lottos are maybe a couple $100 each, if you've got a lot of cash, you could still do it. Okay, it's just not as efficient. Here, I just need only one order's amount. Whatever the largest order is, that's the amount that they hold as it waits for the order to trigger. Okay, so on Thinkorswim, all you got to do is press that shift button, make sure your order says OCO, and then you can start adding. You just hold shift and you can add the strikes that you want, play with the price, get it a little bit lower, and then you can start putting your stink bids across 8 different orders. All right, now what should you use as your stink bid? That depends on implied volatility and Black-Scholes Merton options pricing model. That goes beyond the scope of today. Perhaps on one of our Theta Thunders, I will go over that with you guys. I'll try to dumb it down as much as possible so you guys can have a basic grasp of how to use it. And maybe I even program a little script so you guys can just run it yourselves and see what the theoretic values are. I might even do that for you guys, okay? It shouldn't be hard. Actually, I might be able to just download one from somebody who already did one. I know if you go on websites like Stack Overflow, there's a lot of people who put their work online for free. So I might look for one like that and just and you guys can play around with it. But yeah, but it really depends on the Black-Scholes Merton, theoretic options pricing model. I just play around with the implied volatility, and that's how I determine what's a good stink bid that's likely to hit. Let's say, or not likely to hit, but at least is probable. That at least has a chance of hitting. Obviously, if you go down on these leaps and you just put like 5 cents, it's not, there's no chance that that's going to hit, right? You have to be a little bit sensible, even though you are putting little low stink bids. You still have to be sensible on what your bids are going to be, or you're just going to be sitting there and it's not going to execute. All right. So again, I'll show you guys how to do that in one of our Theta Thunders in one of our later episodes. Okay, but the actual mechanics of it, that is how I do it on Thinkorswim. Okay, so there's that. Crypto. Let's go to crypto now. All right. So one thing I've noticed about crypto, okay, is we've actually seen some. So yesterday after high noon highlights, we actually saw a lot of puts getting bought for the September 9th expiration, which is causing a dealer positioning to be negative gamma, all right, from around 1450, that 1500 zone, okay? Since market participants, when you buy an option, you go positive gamma, okay? When you sell an option, no matter if it's a put or a call, it's negative gamma when you sell an option. Okay, so we saw a lot of these buy orders. There was a spread. There was lots of spreads getting bought with the long strike at 1450 puts, and so the dealer, if somebody's buying, the dealer has to, or the market maker has to short that. So the market maker has a considerable negative gamma, and I think from this and just from the order flow that we looked at from the data that one of our members shared with us, BZ, thank you by the way for sharing that with us. From what we saw, it looks like it was from those orders. So this is what could happen. Okay, I'm not trying to predict the future, but this is a possibility. So before September 9th, if we see that Ethereum closes under 1450 for a few sessions, we could see the market makers having to hedge their gamma, close their short puts, which means they have to buy puts, which means there's another market maker who's going to have to sell them those puts, so they're going to have to short the underlying. So weakness begets weakness. If we close a few sessions in a row under 1450, that could be a possibility. We could see a gamma squeeze down in ETH. Okay, but again, it would have to that panic would have to start. And again, I think in order for that to even be a possibility, we have to be under 1450 for a few sessions. All right, we have to close there for a few sessions, I think. We'll see. Okay, we'll see. As far as other block trades, we're actually seeing now some trades coming back in the March 2023, also in December. We're actually seeing some call selling happening. Not just in those expirations, but also in the September expirations. We're seeing some call selling now. All right. I'll see later on today whether or not that expands the open interest or if that decreases the open interest. But if it decreases the open interest, that just means that a lot of the calls that were opened previously are getting closed. If our open interest increases, that means that means a lot of participants are selling calls, maybe to harvest a little IV, maybe harvest a little premium, maybe have a hedged short position. I don't know. We'll see. Okay, but we need a little bit more data. We need to see how it closes later today in order to make that determination. I don't see the OI changing much from last night till now, so we'll see. I think it updates little by little throughout the day. I'm not sure about that, but I'll report to you guys tomorrow after I take a look at that data tonight. All right. Let's actually look at options positioning. I just want to take a look at that September 9th that we looked at yesterday. So yeah, we see that a lot of positioning here on the put side. Somebody bought these 1450. Let's see, volume. Yeah, somebody bought these 1450s or so right here. Started building some spreads, I think, here. So we're still seeing a lot of participation in it. We'll see. We'll see what happens. I don't know what's scheduled this week. I don't know what kind of risk event there might be. But yesterday, there was some speculation, or maybe it could have been speculation, but there was a lot of buying again. And it was the 1450 strike that was bought, and then I believe it was 13 or 1350 that was sold. So we'll see. All right, September 30th. That's another volume area that I saw that had a lot of interest. Wow, that's a big OI too, right here on the put side. Also on the call side, out the money. And then obviously December, November, obviously, we've seen that for months now. The OI and volume increasing on this. So I don't think anything has changed on the December and March, expirations. Okay. So that's all I have. All right. Anything else you guys wanted to see? Anything else you guys want to look at? I see people typing here. Oh, I see some of you guys jumping in on UUUU with me. Any idea if you buy shares and sell CCs the same days, does that count as a day trade? Okay, so one of our Discord members asked, if you buy shares and you sell covered calls the same day, does that count as a day trade? No, it does not. It does not count as a day trade. Okay, it is considered different. Let's say so there's that example. Let me even take it a little bit further. Let's say you buy, let's say there's stock ABC. You buy the 100 strike calls today, okay? And let's say you sell a 100 strike call. So let's say you buy the 100 strike call that expires this week, okay? So you buy that today, 100 strike call expires today. same day, again today, you sell the 100 strike call for next month. That does not count as a day trade either, because the expirations are different. So if your strike, your expiration, any of those things are different, it is not considered a day trade. Okay. I hope that answers your question. Does that answer your question? Thumbs up, thumbs down. Very good. Thumbs up. Very good. Okay, guys. In that case, if that's it, have a wonderful day. Thank you for joining me today, and thank you for listening in. I know you could be anywhere in the world, but you decided to be here with me, and I do appreciate that. Our links are in the description down, the video description down there. You can see our links to our Discord, our Twitch, our podcast. Join our Discord. It's free. There's no paywalls. Come join us, have a conversation. We have a lot of our triggers announced in our Discord. Hit like, subscribe, comment on the videos as well. I check those comments. I see sometimes, some of you guys put some colorful commentary on there. It's always nice to see that. But we'll be back at it again tomorrow at noon. And later this week, I'll have our second episode of Theta Thunder available as well. Hope you guys have a wonderful day, and I'll see